Hey, hi guys. It's the September meeting. It's James and Lex here for the Trading Club meeting. Um, as always, make sure that you don't share all this with your friends. You know, we try to do a lot of work, and it really is meant for you guys only, or you girls, like guys and girls only. So please, yeah, keep it to yourself. Obviously, we are an educational company, so don't start trading based on anything we say. This is all to help you make your decisions. At least that's what we're trying to do. But yeah, don't decide based purely on what you see here. And as always, the idea of meetings such as this is to come up with trading ideas and to have a better feel for how James and I look at markets. When we see data, what are we thinking about, and hopefully pass on some of that those skills to you guys. If you have questions, uh, as always, email them to us or try to answer them either individually, or if you think it's useful for the group, we'll put them in the group somewhere in the presentation. We're not going to mention individual names all the time because it's sort of becomes slightly boring. But obviously we know most or all of you guys anyway. So let's start off with the macro indicators. Absolutely amazing month last month. Huge volatility, some unbelievable action, some unbelievable price action. But as always, let's just look at what's going on in the economy. And we have a weekly report which you receive, so we're not going to look at every number in a lot of detail. But these are the main macro indicators on a monthly basis. It's the the 1st of September, so this thing was done yesterday. So there's a few changes from this one. Although in Germany the PMI came out pretty much as was estimated at 53.3, 52-week high. So Germany is looking good. Italy came out 53.8 as opposed to 55.3, so that's deteriorating a bit, but it's still in expanding mode. So Germany, Italy looking good. China new orders came out actually 49.7, which is a 12-month low, and it's not looking good there. So China is slowing. You've all seen it in the newspapers and on the screens. So China is the main concern, and we'll look at that a little bit more later as well. Then we also just had the US ISM new orders, and they came out at 51.7. So that again is a 52-week low. So Germany, Italy, Europe looking okay. China not looking good. US not looking good either. If you then look at the architectural billings, that actually looks okay. So the housing market is actually not that bad. Container traffic, so economic activity in the US also looking pretty good, and retail sales sort of in the middle. So if you add up that total picture, then you would see that actually the US ISM is going to be a negative number. China's negative. Italy is going to be a bit negative. And Germany the same. So this is going to be like very close to zero. So economically, globally, not that much going on. Although when you go dig a little bit deeper, then you know China and US, the two engines of the world, have deteriorated. So let's have a look at the chart here. You look at Germany, so ticking down a little bit, but still okay. Italy was actually at the highs, much better than people had expected. It's not really sustaining it, but still looking okay. And then we see US is diving, and China is diving as well.
So just to remind people, we're looking at 50 as the threshold for expansionary territory, and below that, supposedly contraction as a leading indicator of the cycle. Is that right?
Exactly,
Yeah.
exactly. So 50 is the golden number. Anything above 50 is good. Anything below 50 is bad. Line ticking up, it's improving. Line ticking down, it's getting more. It's deteriorating. And we can see here that obviously it was like done with the numbers from last month, but you can see that pretty much everywhere it's now it's ticking down.
Some of these can be pretty volatile, like the particularly new orders component of the US ISM, and as we've seen, it's really fallen, 51.8. So that's why having a look at the moving averages that we apply, the grey line on each of these, can be perhaps give you a clearer picture of what the trend is or where the momentum is.
Yeah, but if you look at 51.8 on the new orders in the US, that is at the lower end of the range.
Yeah, really,
so
really
even
bad,
though
but it's begun turning down. Recently.
So yeah, you saw the moving average was preempting that, so it's getting worse. And when it goes below 50, and we'll talk about it later, then US rate hikes might be off the table. So we also look always at short-term indicators. They're much more price action based. So while the longer term and short-term economic data are based on what's happening in the economy, here we look at what's happening in the markets. And this is actually like super interesting picture at the moment